Welcome back to the Traders Network. I'm Michael Yorby, your host, broadcasting to you live on the Dallas KFXR 1190 AM Clear Channel Studios, streaming to you on iHeart app as well as yorbamedia.com. All right, we've got Nick Santiago, President, CEO in the Money Stocks with us now. Nick, welcome back. How are you?
It's great to be back, Michael. Thank you for having me.
My pleasure. How'd the trading room go this morning?
Trading room was pretty good today. We got a little bit of a lighter volume trading week due to the holiday, I believe. So it's been a little bit on the slower side, but nonetheless, we're scalping out a few winners here and there. So always good to do. And but again, it's been a little bit slower this week with the holiday upon us this past Monday.
We'll get past that next week. It'll probably ramp up for us. UAL, United Continental Holdings, you wanted to talk about that one first.
Yeah, I wanted to bring that one up because I'm looking at the daily chart and the weekly chart of this stock, and I'm seeing that the stock is making lower highs. And these airline stocks have been major winners in 2014. But when I start to see lower highs on a stock like UAL, I'm ready to put my short in this trade. So I'm ready to short this equity. Probably going to be looking at it over the next couple of days as a short trade. Down all the way, believe it or not, I think this equity can drop all the way down to $36. So it's currently trading at around 44.5 right now. But when I look at these lower highs on that daily chart, it's sending a signal, especially when I look at the other airlines, and they're all very, very extended on the larger time frames. This could be setting up for a move down to $36.
Completely knock out anything that's happened so far this year, it looks like.
Yes, and I think it's going to do that. But around 36, that's where we would flip it, and we'd start to go long again.
Are you expecting institutional buying at that point? Because that's one of the caveats that you bring out sometimes.
Yes, I am expecting institutional support there. If you notice, I don't know if your listeners have charts available, but if you go back to May of 2013, also go back to July of 2013, that's where the stock actually put in some tops, and now that old resistance points are going to be new support. So I would look at 35 to 36 as a buy area for UAL, but right now I'm looking at it as a short.
Okay. All right. The next one, let me see if I got that symbol right. DSW?
Yes, DSW. This is a shoe store. The stock was just absolutely annihilated yesterday in trading. So they came out with earnings. The stock traded all the way down to $24. Today it's bouncing back a little bit, trading at $24.81. Do not buy this stock. A place to buy this equity would be down around $20.21. It is going to go lower, but that's a place I would step into the stock for a trade. And when I say a trade, I'm looking for about $3 or $4 on it. But step into the stock around $20.25. I think that's a good level to own this stock for a trade.
Wow, yeah, I see where the support came in there. The December of 2011.
Yes,
that is a big deal. It was a massive gap. It was just a big gap on earnings, or was there something?
Yeah, it was a gap on earnings. Stock was trading around $32.68 the prior day, and yesterday it gapped down. I mean, that was a 23% decline in one session. But yeah, when that stock gets down to around that $20.25 level, as you mentioned, there's going to be support going back to 2012, and I think that's a level where traders can step in for a nice trade, 3 to 4 points.
All right. Well, maybe we can get some good pricing on some shoes there for everybody.
Maybe we can.
Okay, Coach, the next one, COH.
Yeah, I wanted to bring Coach up, and you'll see the theme here is that a lot of these retailers, if they're not high-end like Tiffany's or Nordstrom, they're really getting pounded into the ground here, and that's not a good sign for the second half of 2014, despite the market making new all-time highs today. Coach, as you see here, is the stock's been absolutely annihilated. It's now trading down at $40.61, but I have news for you, Michael. This is going lower.
Okay.
And the level you want to be able to get into Coach for a trade would be around $37.49, $37.50. Do not get in it before then. The stock is in a downtrend. It does not have any major support until that level. That's a level where the institutions will come in and support that stock. And I just do not think it's worth getting into before that point.
Okay, and then Dick's Sporting Goods. Boy, you're really hitting all the highlights here. These are all big Texas companies.
Yeah, and they're good. A lot of them are good stocks too. But Dick's Sporting Goods, just to add to the theme, has just been absolutely annihilated. The stock has been taken to the woodshed. In early 2014, it was trading at $59 a share. Today, it's trading at $43 a share. The level I like for Dick's Sporting Goods, Michael, is going to be around $38, $39. I think that's where you can get involved in this stock. But that still tells me it has another $4 to $5 of downside from here.
Okay. Yeah, I'm looking at that. I don't see anything in that price range all the way back down to, say, the beginning of 2012. You must be using something else besides classical support and resistance area to get that price out of there. What are you using that gives us that?
I'm using a secret formula I call mathematics.
Okay.
Everything that I do, every level that I ever give out, whether I'm right or wrong, is always mathematically based. And if I could add it together with prior support resistance level, it just increases the odds. And I feel that that's what trading's all about. You're never going to win on every trade. But if you can increase the odds on every trade, then you're giving yourself a real chance to win consistently. We want to be Steve Wynn. We want to be the guy that owns the casino. We don't want to be the guy at the other side of the blackjack table looking for a free drink in the casino.
Yeah, right. They're the ones that get to pay the light bill.
That's exactly correct.
All right. Now, we've gone through those. What about the classic markets that you cover, like the S&P and obviously the leader? I'm going to ask you about J.P. Morgan.
Mm-hmm. Well, let's go to the S&P first. And the S&P is actually making a new all-time high today. So all in all, the S&P 500 is now trading at around $1,918. This is a new all-time high. The market's zooming and blooming. But here's the problem with the market. The financials are not making a new high. The other problem with the market is that the Russell 2000 is also lagging. That has not even come close to a new high. And you also have a problem with the NASDAQ composite. That is still not making a new high. So when I see the risky assets like the NASDAQ, the Russell, that's where people go when they take on risk. Those are not making new highs. That's telling me that right now the market is very, very complacent. The volume trends today, we may trade the lightest. Today may be the lightest volume day of the year in 2014. Go figure. But when you have light volume, there's an old market adage that states never short a dull market. This is as dull as it gets. But that will not be the case in the second half of 2014.
Okay, what are you expecting then? Because obviously the foundation, from what you've shown us on these different equities over the course of the last several months.
I'm expecting a major decline in the second half.
Tell me about let's drill down into that. When you say major decline, give me some prices that you're thinking about.
Well, when I look at the S&P 500, I think we'll go down and test 1,700.
Okay, that's a pretty big move, man.
That's some serious downside when you look at the market. Right now, I'm in a neutral stance. I've been in a neutral stance, but you have to be patient. These markets are the type of markets where when you don't get volume like this, you get these low interest rates, you get a bounce in the dollar-yen. These are all things that favor the S&P and the Dow to go higher. However, the NASDAQ and the Russell and even the financials, which have not made new highs, that's worrisome. You do have good action in the transports. They're very, very strong and have been very, very strong. That's a supporting factor for higher prices in the near term potentially. But all in all, Michael, I've just shown you over the past, 3-4 weeks of all of these retailers that are just breaking down. And week after week, I go through 3 or 4 of them with you on your program. And when you see activity like that, and even the GDP today, was negative. But this is why we use charts, because the charts will tell us when it is time to pull the trigger and be aggressive on the short side.
Yeah, I didn't believe me. I'm a technician first and foremost, but I do like to keep track of the fundamentals, and I understand what you were telling us about that. You are expecting, because if everybody's pulled out of the alpha indexes and going into the safety indexes, looking to grab a few of the last pennies, if they will, if there's still more upside in there. What are you expecting about the markets that have already pulled back that hard, like the Russell? I know we got a little bounce back up, to resistance here on the NASDAQ. But what are you expecting about these more volatile indexes?
Yeah, well, when I look at the Russell 2000, all in all, the upside is minimal from here. It's had a very good bounce, but and it could go a little bit higher as we continue with this light volume environment, but. The Russell gets to around 1155, 1160, Russell 2000. I really think there's very little upside from that point on.
Okay, yeah, but how far down do you think it may fall?
I think go to 1050, possibly 1020.
Okay, all right. Well, what the heck? Everybody would love to get a bargain basement price on all of these if we can.
Yeah, and we'll get a great shorting opportunity in the second half of the year, and then we're going to probably get a great buying opportunity at the end of the year.
Yeah, we will. All right, we got to run, but before we go, please contact information so they can get in the trading room and watch you trade.
Yep, come on over to InTheMoneyStocks.com. Take a 7-day free trial to our research center. You'll get all of our nightly setups, or you could come over and take a 7-day free trial to our intraday stock chat and see everything we do each and every day. Morning gap plays we put out each and every morning, and we trade throughout the entire session.
And you publish your track record.
And we publish it. It's there for everybody to see. Over 50 winners this year, only 7 losers.
There you go.
And we're about to close out another winner in about 5 minutes.
All right, I'll let you go do that. Thanks,
Thank
Nick.
you, Michael. Have a great day.
You too. Nick Santiago, President, CEO, InTheMoneyStocks.com. Coming up next.